Okay, so good evening. Yeah, so welcome to today's session. And today marks the second day of our bootcamp. And today's topic will be institutional supply and demand. So basically, it's nothing serious, or rather, let me say it's very, very simple. But before we go direct to today's session, or rather the topic of study, I want us to do a quick recap of yesterday's discussion, what we discussed yesterday on our day one, that was market structure. So for the next 5 to 10 minutes, that's what we'll be doing. Then maybe you'll be asking questions on what you didn't get from the yesterday's session. So we Africans being the least in this community, because this is an international community, having members from all over the world, all the continents. Good morning, good evening, good afternoon, depending on your location. Yeah, so we don't have time to wait for anyone because the session is being recorded, and latecomers will just go to the gallery and check. Yeah, so just a quick recap of yesterday's session. We're covering market structure, and it was very, very, again, not that complicated, since most of you never had a question at the end of the session. So I don't know if it was hard that you never had a question, or it was simple that you never had a question. I don't know. But following what most of you sent me today, most of you did a good job actually. Just keep on practicing, and you'll get to understand market structure. It's not hard, okay? Practice, practice. Just fill my DM, send those markups. Any pair, GBP, USD, Euro, USD, USD, JPY, USD CAD, any pair, GBP, JPY. Just do structural mappings, send it to my DMs. Structural mappings, send to my DMs. Yeah. So from yesterday's discussion, basically we discussed order flow as a general, where we say that we have market structure and we have market profile. And I say that market structure is basically how the market prints out. That is how the market makes new higher highs and higher lows in a bullish market, and how the market prints out the new lower lows and lower highs in a bearish market and in a ranging market. Then I talked about how to map your swing levels. That is, in a bullish market, I say that all the lows are strong lows or protected lows, right? Meaning all the lows are strong swing lows and all the highs are weak swing highs, and they should be violated. That is in a bullish market. And in a bearish market, I said that all the highs are strong or protected, because we are expecting these highs to form a series of new lower lows, and all the lows in a bearish market are weak and are expected to be violated, right? And we had a ranging market, and in the same market, that's when we talked about pricing. And pricing is basically premium and discount, right? And I say that we buy in the discounted levels and we sell from the premium levels, and we have the equilibrium between the two zones. Again, I told you guys that generally we have the swing, that is the types of market structure. We have the internal and we have the fractal. And I tell you guys that the internal confirms the continuation or the pullback of the swing structure. And I said that the fractal confirms the continuation or the pullback of the internal structure. So you have to note and know every role of every structure in every particular structure, right? So the swing is generally the bigger structure. Then we have the internal that confirms the pullback or the continuation of the swing. Then we have the fractal that confirms the continuation or the pullback of the internal. Then after that, we talked about how to identify pullbacks and continuations. Generally, that's what I've talked about. I told you guys that when you want to identify a pullback, you check on the internal of that particular structure. Let me say you're on a swing structure, okay? You want to identify the swing pullback has started, you check on the internals. When the internals shift against the swing trend, or rather the swing order flow, that will confirm the start or the continuation. Then for the continuation, we must have an order flow realignment where the internal shift in line with the swing. And the same concept applies for the internal structure. Then I gave you an assignment to do structural mapping on the daily time frame, higher time frame, and the middle time frame. So just a quick one. Today I'll be taking you through institutional supply and demand. It's something complicated. Actually, this particular how should I put it? Is it a topic, or rather, yeah, this is something that most of us are very, very it's something that we meet in our daily lives. We interact with it. Yeah, basically just the normal supply and demand and the demand of products in the market. And as you know, trading takes time, and we always start by maybe making $1 per day. Then as we move to maybe $10 per day. Then we go to $100. Then we make $200 per day. Then one time you make 500, then now you are at $500 per day. Then one time you're at 5,000, $1,000. Then one time you are at 10,000, $100,000 per day. So it's a journey that is like a systematic. You can't jump. Actually, you can't cross any bridge before getting to that bridge. Okay, so you just have to take it slow as you move. So today we'll be tackling that. And yesterday, let me just shift this to black and white. theme, then get back to the daily time frame and hide our mappings. Okay, so I never hid them. Yeah, they are the daily time frame structural mapping that we did yesterday. And you can see some of you are making very, very petty mistakes. You can see what I said. I told you guys that the swing, I'll be mapping the swing in complete lines. I'll be mapping the internal in dashed and the fractal in dotted, but we never map the fractals, right? Because we're going to make the charts dirty. And from this zone, there was our swing, pullback, continuation, break of structure. We shifted bearish, swing, bearish, break of structure, price pullback, failed to give us a new lower low, shifted again bullish. So up to this point, we have this bullish swing leg, which was on a pullback, and currently we are anticipating for that continuation to take out this week swing high, right? So this particular thing you're seeing over here is just the normal thing I was drawing yesterday. What I was drawing yesterday that I know was looking simple for you guys. The things I was drawing this way in a bullish market. I said all the lows are strong and all the highs are weak and should be violated, right? So these lows are strong or protected, strong swing low. These highs are weak, they should be violated. It was violated, giving us a break of structure. And you confirm the new high over here. And I said confirming this new swing high, you check on the internals when they're shifting against the swing. What did we say? Check on the internals over here. You can see the internals here shifted bearish. This confirm this high as a weak swing high. So up to that point, we had a defined swing range, right? After the internal shifting against the swing, what do you expect? This bearish shift in the internal confirms the start of the pullback and it confirms this high to be our weak swing high. We expect the pullback to play around the range equilibrium or to the discounted levels before we start buying. How do you confirm that now we are ready to start the swing continuation? Remember, our swing is bullish. How do you confirm that we are ready to start our swing continuation? Just the same way you confirm the pullback is now how you confirm the continuation, but now in opposite manner. The pullback we confirm with the internal shifting bearish. The continuation we confirm with the internal shifting in line, and that's what we call an order flow realignment. Go watch the yesterday's video if I told you to that session, or if I told you never understood anything, go back to that video. It's just a 1 hour video. I don't know why most of you don't want to watch it. Yeah, so don't make that mistake again. If I told you had any mistake, go repeat. This thing is very simple. There's nothing hard over here, right? There's nothing hard. Just open that video. You'll see everything, every markings, the internals, everything. Okay? Yeah. So today, actually, I told you guys that don't. Okay, there's a guy who just joined, having his mic on. Mute your mic. Thank you. So, who is that guy? Clinton Ochieng, please mute your mic or leave the meeting. Okay, so yesterday I told you guys that when you're doing a structural mapping, don't have chart colors because basically we can trade without chart colors. Yeah, it's just check on what price is telling you and have an objective, then you can trade without chart colors. But for this structural mapping, I insisted that make sure you give me a structural mapping without any chart color, and that's the reason why I told you guys that make sure all your candles are black and a white background, right? So today, let me push this up. Today, I don't want to talk because I told you yesterday that this bootcamp we want to be taking much time on the theories. For the theories, you can always go back to our notes and check. Yeah, so we'll just be going direct to practicals and what is happening on charts. Okay, yeah, because we don't trade theories, we don't trade stories, we trade whatever is happening at that particular time. And basically, supply and demand is basically what happens in our everyday markets. That is your local market. Let me see. There's the same example that I was using yesterday, or the scenario I was using yesterday for the oranges. Let me say this year was a good year for farmers, right? And they had a good harvest of oranges. So when they bring the oranges to the market, they have good harvest, but we as let me say that they are buyers. The people that the farmers will sell the oranges to, not the buyers, right? So the farmers, let's call them the suppliers. Then the buyers are now the people that buy the oranges from the farmers, then to sell to the consumers. You understand? So it's just basic. Let me say that the oranges are much in supply. What will happen in the market? The buyers will buy just enough. If let me say if the normal pricing of the oranges is around 200, the buyers will just buy enough oranges and leave the rest to the farmers. And if the farmers, let me say, if the farmers reduce the price of the oranges to 100, then now what will happen? The buyers will either have more money to buy more oranges, and more oranges will be available in the market. So basically, supply is associated with the sellers, and demand is associated with the buyers. So I don't talk much of these stories. If you want much of these stories, you can just go to the PDFs. Yeah, it's just some stories on oranges. Yeah, but it doesn't matter. Just get the concept. So how do we identify these supply and demand zones in a market? How do we identify the supply and demand zones in a market? So the first thing, supplies will always be, or rather, these zones will always be built from ranges. What do I mean? So in most cases, you always see price behaving this way, accumulating orders. Okay, price accumulating orders. Then price will try to manipulate these guys because in this type of market, these are a market there's no clear price intentions right at this point. So price will try and manipulate these guys, give them a false direction. We call that manipulation. Then it will give us a clear price intention, an expansion. Price pulls back. Sorry, I don't want to. Okay, price pulls back, mitigates this zone, then gives us a continuation. All right. Okay. Like that. In a bullish market,
Vapson moved to AFK.
Will behave to be consolidating or rather ranging. No clear price intentions. Give these guys a false move, that is a manipulation. Then a clear price intention will come out, that is the expansion. Then a pullback, mitigation, then a continuation. Okay, in a ranging market, we just have the normal range, no pure price intentions. Nice. So this is what we have. I've said price will first do as this. Actually, let me just leave it that way. Let's just label them. We have that. Then again, we have these. Nice. Then we have this as a range. So let's waste some time. We have that as a range. Then we have this as a manipulation. Nice. Then I've said after the manipulation, now we'll have the real move. That is the expansion, or let's call it again clear intention. Nice. Then price will come back, mitigate. Let's put it somewhere there. Mitigation. Then finally a continuation. Nice. Very simple. This is basically a range. Then the same thing that we have over here. We'll have a range. We'll have a manipulation. Then we'll have an expansion. Then we'll have a mitigation over there. Nice. Let me put it this side like that. Then finally we'll have a continuation. That's simple. So basically, this is how supply and demand is. Nothing is complicated. Most of you guys complicate this stuff. Right? Yeah, because if at all you've understood what I've explained at this point, you'll understand that generally what we usually have is very simple. And I've said in most cases you'll first see a range or a consolidation, then price will give a false direction, that is a manipulation, then a clear price intention. Some will call it an expansion, then price will come back to mitigate the zone, then a continuation. Is it hard? Not hard. So that's how supply zones are built. Then for demand zones, the same. Then we have a ranging market. Not complicated. So we have how these supply zones, demand zones are mapped. Okay, this is how these particular zones are mapped. We have like from where price pushed up from this range to this high. This is where now we have. Let me now label them over here. We have ranges. We have after ranges we have pivots. We have fractal levels. These fractals are also wicks. Let me just give them that. Let me reduce the size. Nice. Then we have sell to buys. Now let me just write them in full. Sell to buy. In most cases, this sell to buy will be noting them as STB. Then we have buy to sell. I'll be denoting these ones as BTS. Okay, so these all are how supply and demand zones are always profiled or rather printed. So it depends how you map them. All these have their advantages and disadvantages. I've said all these have their advantages and disadvantages. One might choose to map the entire range, right, as a supply zone, supply. One might choose to map only the pivot, okay, and one might choose to map the fractal or the large wicks. The same thing for the demand. One will choose to map the entire range, another demand zone. Another guy will choose to map the pivots, and another guy will only choose to map the fractal weeks. Nice. So what do I mean? Uh, for the how do you put it? For the range, we map the entire expansion where price moved from the opposite direction. That is from the low of the range to the manipulation high to it broke structure. Okay, that is the entire range. The pivot, in most cases, it's only like now in a bearish market. Don't get confused. In this case, we're talking about a bearish market. This is a bullish market. So let's concentrate on a bearish market for the explanation. In a bearish market, the pivot zone is the last bullish candle before the bearish push down. It's usually an engulfment. Okay, yeah. So it's the last bullish candle before the bearish expansion. Nice. That is the pivot. The fractal or the large wicks, just from the name large wicks, you always find that these pivots or these last bullish candles always have some wicks. So one can also choose just to map them. Now that the fractals. So these fractal zones are always pivot zones on the next lower time frame. What do I mean? Fractal zones on M15 will be pivot zones maybe on M10 or M5. Are you guys understanding me? Nice. We have sell to buys and we have buy to sells. So sell to buys or other buy to sells are actually just the interlocking of candles. I don't know how to put it clearly, but you'll find that a candle. Let me use. Okay, let me just. How should I explain it? Okay, let me say this is a candle like that. Is it visible? Let me change. Which one should I change? Let me make it dark. No, not really dark. Not really that. Just a moment. Nice. So let me say that's a candle. Let's reduce the size to around there. Then again, we have another candle like that. Okay. These candles obviously have wicks. So we have a wick over there. Is that wick in the middle? No. Let's make it nice. That's our wick, and it has come to that level. So that's a wick, and this other candle again as a wick. Nice. Are you guys seeing what I've drawn? We're using this one sample to explain both STB and sell to buy and buy to sell. Okay. So you'll find these interlocking candles wicks. So you see this level between this wick and this one. Let's make that supply. That's a supply zone in a bearish market. Okay. And in a bearish market, that's what we call an BTS. Okay. Sorry. Don't forget. It's not complicated. I'll give you. You'll just okay. Then in a bullish market, let me in a bullish market. How should I drag that? The entire that. I don't know. Nice. Let me put it somewhere there. Yeah. So let's assume this is now a bullish market. So in a bullish market, remember now candles are going the opposite direction. So we bring this one over here. Nice. Then this one at that point. Nice. Then now this zone over there. That's now a demand, right? And this demand is a sell to buy. STB. I know you guys have always seen this stuff on charts. Eh? Eh? Yeah. So you guys, let me drag this a bit lower, somewhere there. Then what am I even drawing anyway? Let me just delete. What have I drawn now? Just a minute. Which one should go? I didn't drag that properly, but let me just do that correction. Then maybe extend that to that level. Sorry. I hope you guys are seeing. So these candles, wicks, that are clear. Yeah. And I've said this now. I sell to buy. What do I mean? In this type of market, we expect a pullback like that, and a continuation. So I haven't even created enough space anyway. I hope you guys are seeing. In this other market, we expect a pullback, a continuation. A buy to sell, a sell to buy. Okay, we are selling to buy. We are buying to sell. So I see these BTS and STBs. They are pivot zones on the next lower time frame. Let me say those are M15. If you check on M5 or M10, you'll find that this zone is a candle. Okay, yeah, or this zone is a candle. Is it complicated? It's not. It's not. So it's just that simple. So to get back on the ranges, on the on the pivots, fractal wicks, advantages and disadvantages. Basically, just self-explanatory. What can you say about ranges? What can you say about ranges? Ranges, the first thing is that they are huge, right? Meaning, if you're anticipating or if you're to take a trade from this zone, you are likely not to miss out, but you'll have a reduced RR, right? Let me put the tools. I'll put the tools later. Then for the pivots, you are likely to miss out, unlike that person who wanted to take his trade from this point, but you'll have a more RR as compared to this guy. True, right? For fractals or large wicks, you are likely, the probability of you missing out on this trade is high as compared to these two
Sriram
guys.
joined.
But if you catch this trade, you'll have much more RR than these guys. True or false? True. STBs, there's nothing. I hope you guys have understood what I was trying to explain.
Sriram left.
Okay, have you guys understood what I was trying to explain at that point? Yeah, so as you can see, it's nothing complicated, right? It's nothing complicated. A range, a pivot, and a fractal is very, very simple. And most of you usually just complicate stuff from what we usually know. So I've said simple that these ranges have their advantages and disadvantages. The pivots have their advantages and disadvantages, and the fractals have their advantages and disadvantages. And I've said for the ranges, you are most likely to catch this trade, but you'll have a reduced RR. For the pivots, you are not much likely to catch this trade as compared to the guy who caught this trade at the range level, but you will have a much more RR as compared to the guy who caught the trade at the range level. And for the fractal, you'll have a more RR, but you're likely to miss out. The same thing will apply on the demands. And for the STBs, we don't have those disadvantages or advantages. Yeah, so there's nothing complicated. And I think now we can go on a live chat and check. Any question before we go to a live chat? I think I'm trying to explain these concepts to my best. Very like not that complicated. Yeah, before you go to charts, because if you go to charts, you won't see these things as lines. When you see them here as lines, then they might look simple, but when you go to charts, they might. Let me just print out this. Nice. So just a moment. Nice. So did it really come out? Okay. Okay. Yeah. So we have that. So I think I can delete this. But okay, before I delete this, let's get to chat. Let's try and identify this stuff on chat. So today we are to bring back our chat colors, my normal theme. Yeah. So let's just use the current yeah. So you open your chart, right? What is the first thing you do? The first thing, let me say you have this range. First, before we go to what I want to explain, let's first identify ranges. We identify pivots, and we identify fractals. Then we identify STBs and BTS. Okay. Yeah. So let's just look for one level. Then you'll do most on from your side. So let me say you have this leg. Let me say you have this leg. You have this internal bullish leg. Okay. You can see it. Nice. The entire range is this one. Or let's reduce it to, let's map it. I don't know why this tool of mine keeps on changing, and it doesn't usually change. I don't know why it's changing since we started the bootcamp. Anyway, we have the entire range, right? I've said you map because you can see we have that. Then we have the pivot. That is the last bearish candle before the bullish move, right? So you map this one as the pivot. Then we have the fractals. Now the fractals, no, this is not a perfect example, but let's just use it. We're going to look for another one. These ones.
Move
See,
to
the guy who
AFK.
caught this trade at this level never missed out, but his aura RR is reduced. You can see if you place a trade there, USL obviously has to be down here, right? Has to cover this low, meaning you'll have a reduced RR as compared to the guy who will place his aura trade here or the guy who will place his aura trade there. Is it complicated? It's not. Let's look for a more clear example. Okay, before I go far, this over here, you can see these wicks. Let me zoom in so that you can see more. Are you seeing these wicks? Are you seeing this wick? You can see price board from this one. This is a perfect example of a sell to buy. Okay, this is a perfect example of a sell to buy. And I've said this sell to buy is all buy to sells. Now these are sell to buy because it's buying, and for a selling market it should be a buy to sell. Okay, these are pivot zones on the next time frame. So let me say you check on H4, you'll find this zone as a pivot zone. You'll find it as a black candle or as a bearish candle. Okay, yeah. So let me look for better examples. But these things most of you are well conversant with them. But for the new guys, let's look for better examples. We can take this other leg. You have this bullish internal leg, right? Nice. Where's your range? I said your range you map from this zone all the way to the low, right? Where's your pivot? The last bearish candle before the bullish move. This was the last bearish candle before this push up, right? And where's your factor? I said you map the wicks. Just map the wicks that way, like that. This guy who will enter here is more likely to catch. Obviously, most of them will always catch these trades. Let me say sell is down there. Let's say we are targeting. We want to play that pullback, so we want to target this zone. Let's just have a line at that point. Yeah, we want to target that zone. So that guy will have around 2.96 R. Okay, that is for the range guy. The guy will catch this trade at the pivot over there. That is the last bearish candle before the bullish move. Will have 11.59 R. The guy will catch this trade at the fractal weeks. Obviously, now have a reduced SL. Will have a 16R target, but is likely to miss out unlike this guy or this guy. And this pivot guy is likely to miss out unlike this range guy. Is it complicated? No. So you look for an example. Go sit on your charts later, look for examples and mark them out, share with me. All right. So actually today's session wasn't to go that much because basically we don't have, or the supply demand is not that huge. So after that, we have criteria of how to map the supply and demand zones, or rather how to map the zones that you will want to react from. Because you just can't open a chart. Then you have a leg, right? You have a bearish leg over there. Then you just come and map your supply zone at that point. Then you want to sell. Now you place your tool at that point. You want to sell. You want to sell. So make sure you are writing these notes because I don't have any place of reference. You might ask me something and I don't even know I said it. Yes, but I won't forget what I've said. Yeah. So that's the reason why I'm trying to print out this and I'm recording the screen so that you can again refer later. But make sure you write something that you know can pass, that might not be captured in the document or rather in the documentations. Okay. No, you can't just open a bearish leg or rather a range and map your supply and you expect selling from that zone, right? It can't work like that. We must have rules or rather criteria from which zones are we willing to sell from in a bearish market. The first, okay, so we'll start from the strict minimum, then generally the added confluences. So from the strict minimum, the one and obvious one that most of you know is a break of structure or an eyeballs or a chalk, right? Yeah, so the first one, let's get back to our charts. We'll still use that same level. You want to map your zones, right? Let me look for a level that now has more, has a variety. Can I use this level? Break of structure. Let's use this level. It's not that bad. But okay, we'll look for other samples. So the strict minimums for criteria on how to map these zones, the first and foremost, it has to break a structure. If it doesn't break a structure, it has to break an internal structure. If it doesn't break an internal structure, it has must given us a change of character. And I told you guys that a change of character can be mapped in two different ways, either with a candle body close or with an aggressive break of structure. And I said an aggressive break of structure is where we have the structure shifting with a weak close, not a body close. Yesterday, most of you in the session. So if you're in the session, the video is there. The video is less than 1 hour. Go check. Okay. Yeah. So the first and foremost, it broke a structure. Like you can see, this is an internal break of structure. That is the first and strict minimum. It must have broken a structure, gave us a change of character, or yeah, then it must have been engulfed. So either you can have it as the pivot or the range or an STB or a BTS. What do I mean? An engulfed is where you find you have. Let me look for a good example. An engulf like this one. This zone over here is engulfed by this bullish candle. Okay, this bearish candle over here is engulfed by this bearish candle. Okay, so this is a good supply. Okay, and it's a pivot. That's the meaning of being engulfed. This one you can see it's also engulfed by this massive push up. Okay, I know I'm not that accurate, but bear with me. I cannot be that straight. So you can again see this one. Sorry, was engulfed by this push up. So that's also a strict minimum. We always want to see those imbalances. Some of you will call them fair value gaps. Okay, yeah, nice. So two are the strict minimum. Two are the strict minimum because if you check even this this sell to buy, it was engulfed by this one, right? So we have this huge imbalance. Because the imbalance, for those who don't know how to map the imbalance, we have to talk about the imbalance yesterday, but let's just talk about it today. It's the space between three candles. Let me see. Let me just, should I draw? Let's just use a live chart. Drawing will take time. We have the first candle over here. We have the second candle and we have the third candle. When mapping the imbalance, it's the distance between this wick and this wick over here. So from that wick to this wick, that's the imbalance. Okay, and in most cases it will always be filled. In most cases it will always be filled. Let's look for another one. I've seen three candles. The first candle, second, third. How do you map it? You have this week and this week over here. Where is your imbalance? This one. Nice. Let's look for another example. We have this candle. Sorry. We have this candle. Second one, third one. The last week for the first candle was this one and this other candle. Where's your imbalance? Is between this week and this one. This is your imbalance. In most cases, these imbalances will always be filled. Should you look for another imbalance? No, it's very simple. You go do your own research now on more imbalances. Yeah, so we always want to see that engulfment to confirm a zone as a demand or rather a supply zone. Okay, yeah. So other added conferences are things like flip, liquidation or other sweeps, inducements, or maybe a zone is stuck within an HTF level, or maybe again you can introduce pricing. A zone is unmitigated. So I don't want to rush over that. Let's just look for those. Let's start from a flip. A flip. Before we go to a chart example, let me draw a flip. Let me say price was doing this. Price was bearish. Then at this point we're expecting price. Okay, let me just draw another leg. Okay, a pullback. At this point we're expecting price to do what? To continue the bearish trend, right? But price comes here to this supply zone, give us a reaction. The reaction over here first to check out this lower low, then it shifts bullish. Okay, what does it leave behind? It leaves behind this low that broke this structure, or that broke this high. This is a flip. This is a supply to demand flip. What do we expect when price returns? We expect a reaction, then a continuation. Is it hard? It's not hard. I've said there was a previous supply zone, right? Price comes, react, gives us a failed reaction, right? Price gives us a failed reaction, leaves behind a demand zone, and price shifts over here. Meaning we've come from a bearish market to a bullish market, leaving this demand. What have I called this demand over here? A supply to demand flip. Nice. For an opposite scenario, let's say you are on a bullish trend, like that. Price pulls back, continues. So we expect a continuation from that zone. Price reacts, fails to give us a new higher high. Does that, does that, does that, and does that. Okay. So this reaction at this demand zone now, because we want to see that reaction has to be there for us to confirm. This is the demand zone for us to confirm that it's a flip. Okay. If there's no reaction, it's not a flip. Do you understand? If there's no reaction, then it's not a flip. Do you understand? Yeah. So that's a supply. So we have this demand being flipped to being a supply. So this is a demand to supply flip. There were interaction of buyers and sellers at this point. Buyers were overpowered and sellers came into the market. It's not hard if you ask me. Yeah. So let's look for such things in the market. The first one always happens at the zone that we have a shift. Price was bearish. Pullback, continuation. Price comes back. Give us a reaction. You can see this is a reaction because you can see this candle came and meet. Okay, let me just map the supply zone. These are supply zone at this point, right? Are you guys seeing, or I should zoom in more? Nice. Okay, so that's our supply zone. What do we expect? We are bearish. We expect a pullback and a continuation. But you can see what happens. Price comes, reacts, try pulling back, fails to give us a new lower low. What happens? It shifts bullish. This over here is left as a demand. That's a flip demand zone. That's a flip demand zone. Is it hard? It's not hard, my boys and my girls. It's not hard. Let's look for another example where the market shifted. Where did the market shift? Bullish. Okay. Pullback. Nice. It's at this point. So out. Let me zoom out again. I want to clear samples so that most of you don't get confused when now you're now left with the charts. You know, when I'm explaining this way as a mentor, everything is simple. Right now, everything is simple, and you're like, ah. But now, when you're left with the charts, you'll be making a lot of noise. Yeah, you'll be making a lot of noise. Yeah, so let's use this example over here. So you can see what was happening. Price was bullish, pullback, continuation, right? At this point, we expected a pullback and a continuation from this particular demand zone. What happened? Price reacted. Let me now get this off. We have a demand zone over here. What happened? Price reacted, tried pushing back, you can see, but it failed, giving us a shift. This supply left at this point is a demand to supply flip. Okay. Are you guys seeing that? Price continues bearish, pulls back. Obviously, what we're expecting at this point, a continuation, right? Again, it fails, and price pushes above, leaving behind what? A demand. What do we call this demand? A supply to demand, flip. You can see it later held and price pushed. So one thing you have to know, these flip zones, they are always strong zones because particular orders are overpowered. You can find buyers orders have been overpowered by the sellers. So always take key notes of them. There are also how to identify the supply and demand levels. And I'll say the next one that we're looking at is a sweep, or rather some of you will call it a liquidation. So what I mean is this, price, okay, let me just use our first example. You can see this manipulation over here swept all the stop losses or rather the guys that were over here, right? That's the sweep or the liquidation, okay? Yeah, so that is also an added conference, sorry, when you're looking for these supply or demand levels. Let's try looking for such on charts. The first one is obviously over here. You can see we had a sweep, liquidation, then our price left us with this zone, right? Okay, let's look for another one. You can see this one over here. We had a sweep. Let me zoom so that you guys can see. Okay, so a sweep or a liquidation is it doesn't have to be strong. A liquidation is a liquidation, or a sweep is a sweep, okay? And price left this pivot demand that was later mitigated, and sorry, and it held price, right? Yeah, let's look for another one. There are so many. You always see me mapping them on charts: liquidation, price moving from that zone, liquidation, price moving from that zone, liquidation. Yeah, price always leave. You can see over here we had that liquidation, price left this demand zone. Yeah, so this zone is a very strong zone and likely to hold. Yeah, so you can see when it held price, the only difference is that price had gone. Okay, so that is also an added conference. Okay, that is also an added conference. Conference number three. Remember, I talked about the strict minimum. So we are on other conferences. We have a strong liquidity or rather an inducement. So it's just a normal sweep. Okay, that's where let me just draw a sample where the first price was being maybe that, then price comes, sweeps this high like that. So up to this level we already have a sweep, right? Then price comes and again sweeps this high. Okay, so these are strong liquidation. What do I mean? Price had already confirmed, okay, we were bullish, it had swept this high. It already confirmed its bearish shift. We were ready to take our trade from here. But again, this high gets swept again. Okay, then we shift. So taking your trade from here is very, very high probability. Okay, yeah. The next conference on how to identify these supply and demand levels is when a zone is stuck within an HTF. Okay, a zone being stuck within an HTF. I don't want to move to another time frame, but I'll just explain what I mean. Let me say you have an or let me look for something that most of you will understand. So let me say you have huh, mm, hmm, start within an HTF. You just basically find that you have a zone on maybe HTF, then inside that zone of your HTF, you find an MTF zone again inside. Yeah, so it's just an added conference. Uh, it's just an added conference. Now I don't want to shift to another time frame, but I'll show you them maybe in, when you're looking for entries now on the on another session. Then another one is maybe pricing. Pricing now we talked about. We don't want to buy from the premium levels. We don't want to sell from the uh, discounted levels. Yeah, so because I said you have your range, price is running from this high to that low. This is the equilibrium. Below the equilibrium, you have the discount. Above the equilibrium, you have the premium. You don't want to sell at this point, right? And you don't want to buy at this point, right? Just that simple pricing. Then another one is if a zone is unmitigated. So as you know, fresh zones are always stronger, or they look more promising than uh, unmitigated zones. Then the last one we can talk about is maybe when that zone is in a chain. So what I mean when I say a chain is something like this. Price is in this type of trend. So you can see we are forming a chain of supply zones. So obviously, just know that when price pulls back, we're just likely to sell from that zone again, because that's what price has been doing since it started from this zone, this one, this one, this one. So this is a chain of supply chain. Though these chains usually give liquidities. So like this chain of supply will give a trend line buy side liquidity. But this is an added conference because it's something like it's a pattern that has always been happening. Price pulling to that chain, going down, pulling that chain, going down, pulling that chain, going down, pulling that chain, going down. So it's likely to again pull that chain and continue like that. Yeah. So are we done or not? Have I gone quick? I've not. I've not gone quick, right? So basically, I've explained how to identify supply and demand levels, from how to map them from the range, the pivot, the fractals, and the STBs, having the advantages and the disadvantages of all those zone mappings. Then I've explained how to the criteria we use to map these levels. So I've talked about the strict minimum where we had at least we want to see a break of structure or maybe a change of character. Want to see things like engulfed, leaving behind that imbalance. Okay. Then I've added the conferences on these voice selection criteria like flip, sweeps, uh, strong liquidations or other inducements, start within HTFs or start just start yeah. Pricing, that is premium and discounts, and being unmitigated. Then again, I've talked about chains. Any question? I know the session is boring now, right? It's not. Actually, I'm enjoying what I'm doing. I know most of you might be well conversant with this, but the problem is that now when you're left with your charts, that's where the problem starts. When you're left with your charts now, do what I've explained. That's where the problem now starts. Yeah. I've seen our. So I'll share this, guys. All I want to share because the video again won't take more than 1 hour. It will be around 1 hour 10 minutes because yeah, we're just done. So I'll just share with you this all. Then you'll check from your side. Then try and share with me. So I've seen Anesu raising his hand. So just unmute, and ask your question. I can't get you. Is anyone getting him? Because I'm just hearing some cracking sounds. I can't really get you clearly. Okay, okay. I think the best thing you can do is to type. Please type, because I can just hear cracking. Is anyone able to hear his voice clearly? I doubt. So just type in the chat box. I'll see it. Just type. Yeah. So Anesu, please type, because your network may be having some issues. You're not that clear from your end. Yeah, you're not that clear from your end. So please type. So basically, what I've explained here is not complicated, right? So let me not see someone again asking what is BTS, what is STB, how do we map them? Very, very clear. It's right here in the screen. Let me not see someone asking how do why is data is mapping today? Data is mapping range. Tomorrow data is mapping only pivot. The next day data is only mapping fractal. I've explained it, and you have the disadvantages and the advantages. So you have everything on supply and demand. I wanted to ask, okay, I want to ask on buy to sell and set horizons. Do they have to break the structure for them to be valid or for them to hold? They have to break structure. They have to break structure. In most cases, they always have to break structure, but it's not a must. Because in some cases, you just find them along the range and they will hold. Okay. I can be talking about. Okay. Okay. In most cases, they'll break structure, but in some cases, you'll find them along. So, like if you check at this point, this particular sell to buy broke this structure. This sell to buy broke this structure, right? Okay. Let's look for another sell to buy. This is another sell to buy. This one over here, it broke structure. Now there are some that doesn't have really break structure. Now like this one, it never broke structure, but you can see it held price. And this from a daily time frame, meaning this lasted 2 days. You can see this lasted 2 days. Okay, yeah. So in most cases, it's better for them to break structure. You can see this one broke structure, held price for how many days? 1, 2, 3, 4, 5, 6, 7 over 1 week. Yeah. So in most cases they'll break, but in some you always find them along. Let's see where we can find one along our range. Uh, The problem is that when you're looking for this stuff, you can't find them. Now, okay, now like this one, you can see this one didn't break any structure, but you can find it will hold price. Price will come, sorry, and it will hold. So you just always map them and wait for a reaction. This one over here, you can see it broke the structure. Yeah. So I think that is answered. Any other question? Any other question? Yeah. So if there's no question, this is the assignment of today. Go back to yesterday's mapping on the DTF. Map the relevant supply and demand levels that held price to the achieved objective. Are you guys understanding me? Map the relevant supply and demand levels that held price to the achieved objective. What do I mean? We had this leg, right? The pullback, then this objective was achieved, which is on held price, this one. Be very accurate. Don't map noise. If you map noise, I won't give you a feedback on that DM. You know how I behave. I know most of you know me. Yeah, if you make noise on your charts, forget. I won't give you a feedback because I don't really care much. Because if I told you to reach good, you can see perfectly. My lines are not even zigzag. Some of you are having this kind of lines. When making straight lines, when drawing your lines, hold shift. Okay, hold shift. They'll come out straight. When mapping these zones, okay. Let me say you want to map this range. Let me just zoom. You want to map this range. Map it perfectly from that low to that high supply. Okay. If you want to map the pivot perfectly, the last bullish candle before the bearish move. If you want to map the fractal perfectly. Okay? Is it hard? Not hard. I'm not cruel. Okay, I'm not. Yeah, so just do what I want. When you do what I want, you'll be a very good friend of mine. Okay? Just do what I want. You can see. Don't come map me a pivot from that zone like that. Okay? Either choose to map the entire range or the pivot itself, or if you choose to map this one, just map that one perfectly. And make sure your supply and demand levels have different colors so that I can identify them easily. Don't map all supply and demand levels with the same color. Okay? Yeah, so just change the color slightly. And when mapping them, don't have a strong color. Like, let me say this is a supply zone. Then it's looking like that. Okay? This is boring. Just make it dim. Okay? Yeah, just make it dim. Nice. So I hope you guys have understood. I'm expecting your DMs from now. Yeah, I remember years ago when I was learning this stuff, I was really punctual. I was making a mistake, but within a night, I was already perfect in mapping them. Yeah, so unlike you can see that now you have me. You might be lazing around, but it's okay. You'll just prolong your learning curve. But if you really want to shorten your learning curve, whatever we tackled yesterday, you claimed yesterday, we do the revision quick, you're well. Today you tackle it, you start, you shouldn't even, why are you even sleeping in the first place? It's just, for the guys who are in East Africa, it's just 10 a.m. Sorry, 10 p.m. You'll find some of you going to bed. Yeah. Do this thing. I'm always responding to DMs until 3 a.m. Personally, I don't sleep. And I think I have one of the